And today we're going to talk about the U.S. election aftermath and assessing the market reaction, hopefully coming up with some sort of strategies that we could apply to our tradings in a long and short term. Before we start, I want to welcome you all, and could you please confirm that you can hear my voice with no problem? If you could please type in a Y for yes in the chat box, so that I know that you can hear me. Welcome everyone. Welcome Margaret, Marlon, Melissa, Mohammed, and everybody else who are joining us right now. And also, if you could let me know that you can see my screen. Right now, the screen is Orbex U.S. elections aftermath assessing the market reaction. That everybody can hear me because we need to move on. So before we start, I am going to take a look at the risk investment warning. We are trading forex here, and trading on margin can definitely result in losses that may exceed your deposit funds. So pay attention to that, and before deciding to trade, you should carefully consider your own investment objectives, your level of experience, risk appetite, and so far and so forth. So everyone, this happened. The election results are out, and the winner is Donald Trump. I'm wondering if we have anyone from the U.S. here, if we have any Trump supporters who are happy today, if we have any Hillary supporters who are, well, not so happy. But the fact of the matter is that he did win 279 electoral votes, while Hillary actually won the popular vote. So more people voted for Hillary, but the U.S. system is in a way that it's decided based on electoral votes, which is a very confusing system that I'm not going to get into. So there we have it. We have Donald Trump as the president of the United States. So previously, in the previous webinars, we had been talking about the outcome, the potential outcome that the elections can have and his presidency could have on the markets. And while we had some sort of this same market reactions in the beginning as the election results were unfolding, to many people's surprise, the U.S. markets and the U.S. dollar itself kind of picked up after the results were out. And so we've been trying to understand what is going on. So I do have a theory, and I would like to share that with you and see where we can go from here. So today we basically are going to have an overview of the U.S. economy. We are going to take a view of Trump's policies and what he's planning to do and how the markets could react to that. And well, we are going to talk about the market reaction to election results, and then we're going to do a quick Q&A. So before that, I do want to ask you, did anyone trade the U.S. elections? All right, we're getting yeses. All right, how did that go? Made money. Okay, that's great. All right. So I didn't trade the U.S. elections. I simply left my previous positions open with proper risk management. But so before that, we're going to take a look at the U.S. economy and see where we stand actually right now in terms of U.S. economic outlook, regardless of, well, the outcome and what Trump is going to do. So in terms of growth, the advanced estimate for the third quarter GDP saw a 2.9% annual quarter-on-quarter rate of expansion, and this is faster than Q3's upwardly revised 1.4% pace, which was revised higher from 1.1%. And not only that, the reading for Q3 GDP is the fastest quarterly growth rate in 8 quarters, which is great. And the quarter-on-quarter GDP growth has been picking up the pace for 2 straight quarters. And the year-on-year growth was basically 1.5%, which is faster than Q2's rate of increase. And the faster pace of growth is great news after Q2 printed the weakest annual growth rate since Q2 of 2013. This also effectively ends the 5 consecutive quarter of slowing annual GDP growth after peaking back in Q1 of 2015. So on the other hand, we have consumer spending. Consumer spending, also known as the personal consumption expenditure, is still the backbone of the U.S. economy. Consumer spending expanded by 2.1%, adding 1.47% to annual GDP growth. And the trade was also a help to drive growth. Business investment also finally contributed to growth. So these are the elements of growth that we're talking about, right? On the other hand, we have employment. U.S. economy only generated 161,000 non-farm jobs in October, missing the expectation for a 176,000 increase. That was really some sort of dismal outcome. And not only that, the major problem is that the NFP has been missing expectations for 3 months in a row. And the only good thing about it is that at least the reading is still above the 100K floor, which is the number of jobs needed per month in order to keep up with the working age population growth. And the reading for September, on an upbeat note, was upgraded from 156,000 to 191,000. And even better than that, the reading for August was upgraded as well from 167,000 to 176,000. Right, and so that's an extra 44,000 jobs from all those revisions, which is at least a little bit of an upbeat tone for the NFPs, for the missing NFPs that have been depressing a lot of market participants. And in the end, we have the inflation, right? So the headline inflation, I don't have it on the headlines here, but the CPI, which is the for inflation, increased by 0.3% in September, which is faster than September's 0.2% increase, and a 5-month high. The headline year-on-year reading advanced by 1.5%, which is the best reading since October 2014, which is really great. And so the business and sentiment, on the business and sentiment side, the industrial output fell. So this is now a downbeat news, right? It fell by 1% on a year-on-year basis in September, which is slightly a softer drop compared to previous months, 1.3% drop. And the annual industrial output has also been in a negative territory for 12 consecutive months. So putting these all together, actually, hold on. Let's talk about also trade. So we have trade. The U.S. trade deficit narrowed from $44.46 billion to $36.44 billion in September, which is the tightest trade gap since February of last year. And so this narrow deficit is thanks primarily to imports dropping by 1.3%, and this is the lowest import value since May of this year. So the rebound in Q3 GDP growth is really good, although consumer spending did weaken a little bit. In the reading in advanced estimate, the revisions are to be expected in the next time. Other than GDP growth, the most recent inflation readings are also rather impressive. And while the NFP has been missing expectations for 3 months, they're all still above the 100,000K. And so overall, looking at all of this, the U.S. economy appears to be in good shape, despite what a lot of people in the U.S. Believe, and that is the reason why they voted for Donald Trump. And and it is that therefore understandable why the Federal Reserve, said during their November FOMC statement that the case for an increase in federal fund rate, which is interest rates, has continued to strengthen. So this is before the election results were out, and the Fed never singled out a U.S. presidential election and a Trump victory in particular as a risk factor during the November FOMC statement. But now that Trump has won the presidency, we really have to wait and see if the Fed still thinks they're on track for this highly awaited rate hike, which is definitely going to create volatility in the U.S. dollar and the U.S. markets in general. A little bit about the policies of Trump and Hillary. Do we have anybody who lives in the U.S.? Because otherwise I'm not going to get into the details of that. All right. Well, the majority seems not to be in the U.S., so we're not going to get so much into it. The only thing that could have an impact on international is obviously his trade and jobs and wages policies. And so he has moved the goal of post on minimum wage, and we really don't know what his policies are on that. In terms of trade, he has also flipped back and forth. Mostly he is anti-globalization, he's anti-international trade. So we have to wait and see to basically understand what his policies really are going to be. It seems like he could become even a more moderate president than what he advertised during his campaign just to get the votes. And I'm just saying that based on his presidential speech after he won, that he basically was pretty gracious, which is very unlike him. So that could be the reason why the markets reacted the way they reacted right after his speech. So this chart is something that we have covered in previous webinars, and this is basically just a historical chart of Republicans versus Democrats U.S. dollar index monthly chart. So this starts with Reagan. During Reagan, we had the crash, and after that, basically, Bush inherited the continuation of U.S. dollar weakening. And after that, we had Bill Clinton, and he managed to, overall, in general, again, we had a lot of ups and downs, but in general, he managed to bring the U.S. dollar index higher. The DXY as a basket of, as the value of U.S. dollar against a basket of other currencies, including, of course, the major currencies, but also some of the minors. And then during the Bush administration, of course, we had the Lehman Brothers crash and the global market crash, and therefore the overall devaluation of the U.S. dollar. And finally, we had Obama. He had a shaky start, but then in the former 4 years, he managed to bring up the value of U.S. dollar, and then it has been consolidating since 2000. This is versus many other currencies, right? So with this, if we just stick by the rules and technical analysis, we could say, oh, okay, so during Republicans, the U.S. dollar falls. During Democrats, the U.S. dollar gains. But this definitely was not your typical U.S. elections, and Donald Trump is not your typical president. I can't believe that I'm actually calling him president, but he actually did become president, right? So what happened to the market? Let me actually just now bring up, now that we've done the fundamentals, just bring up the charts and get down to business. I'm going to, so let's start with dollar yen, actually, because that is a little bit more, you can see the movements a little bit more visibly. So this is what happened. This is the election day, and this is today. This is the daily chart. You may not be able to see the shadow, but the market actually, let's move it back down to the 4-hour chart so you can see what exactly happens. So this is how much the market's crashed. Right before, so as the election started, this is the 4-hour chart, right? And people were voting. The market was kind of going up on projections that Hillary is going to win. And then as the night unfolded, and this was a very, very long election day and night, and I don't know if any of you was following it, but it definitely was incredibly tiring, very, very long, and it took them forever to announce. But we could see very early on that the momentum was behind Trump, and that he was, based on the polls, many people were just assuming that Hillary is going to win by a landslide, but it appeared hour after hour that Trump really definitely had an edge. So with that, the markets actually obviously panicked, and the dollar yen, it dropped from its high of 105 all the way down to 101. So that was a crazy, well, great movement, very much like Brexit, the initial movement. But then that is when things changed. Then Trump won at around, I want to say it was around 2 a.m. here in New York, Eastern time. And as he proceeded to give his acceptance speech, he actually was incredibly gracious, as I said before, which really took many people by surprise. And previously, he had said that, oh, if I become president, I'm going to jail Hillary Clinton, I'm going to do this and that immediately. But he didn't say any of that. He didn't say anything that would really create uncertainty at the time. And he actually congratulated Hillary for winning the popular vote, and he had some nice things to say about her, which was very unlike him. And I really do believe that that is when the markets kind of saw a relief, and they were thinking, okay, maybe he's not all that bad, because I mean, we were just talking with a friend, and there are definitely stages to grief, and at the beginning is denial, and then you get into anger, and then you get into bargaining. Oh, maybe I can do that. Maybe he's not that bad. Maybe we can get him to do this and that, and then you get to depression, and then you get to acceptance. So this was the immediate market reaction right now, is either the denial part, that he is, well, not our president, he's not going to be our president, or that he's not going to be that bad. We actually don't know. I really do hope that he is going to be able to deliver and become a good president. We personally, I have been focusing on the things that he has been doing wrong, but we have to understand that he used to be a Democrat, and that is why this is important, because he used to be a Democrat, and then in his acceptance speech, and especially in the past 2 days, normally he had a scandal coming out every single day. In the past 2 days, he hasn't had any scandals coming out, which is pretty interesting, right? So this has got many market participants to believe maybe he is going to go back down to his original moderate, like all his rhetoric was just to get votes of middle America, and now he's going to go back. So these are the words that we are hearing right now on the street in New York among market participants. Of course, nobody knows what is going to happen. He's not even the president yet. The inauguration is going to be on January 20th, and that is when everything really is going to start. Up until then, he is going to start making his team, and depending on who he chooses as his team, can still also get some sort of uncertainty if he goes if he goes on and chooses people that are risky for global safety, or so we really, I mean, that is the point. This is Donald Trump, and we don't know. But so far, the market reaction actually has been, to my surprise, for sure, to the upside, which really worked pretty well for the prediction. So because we were predicting that Hillary is going to win, so people were predicting that and were betting on that, are making money regardless, which is very interesting. So so now what, right? So that is the question. So let's go back to the daily chart of dollar yen. We had, I'm going to add the Ichimoku Kinko here, which is my very favorite moving average combo, 5 moving averages, right? So with that, we can vividly see that the market actually went all the way. So all right, let's do a little bit of a history of dollar yen. The dollar yen started a downtrend beginning of 2016. It bottomed out right here at 100. Right, so this 100 is historically also very important support level, right? And mark it in a way that everybody can see. This is our support level. I am going to, I'm going to try and make the screen a little bit bigger. All right. I know that it is a little bit hard to see the prices here, so I'm trying to make it a little bit bigger. Okay, there you go. So all right, where were we? So here is basically how the dollar yen has been acting, and then right at the beginning of October, we finally had a of the HMO cloud. Before the elections, we had confirmation moving forward and even testing the pivot level of 105. The reason why we call it the pivot, I'm going to tell you in 1 second, is because of the Fibonacci retracement analysis. So we are going to create our Fibonacci. And this 105.25 falls right on the 25% Fibonacci. Very important, right? So during the election day, it actually tested below the Ichimoku cloud, very Brexit-like, but then it started moving back up, and now it has even broken above our pivot level of 105. All right, and next, our next resistance level is actually right here at 108.80. The resistance, we're gonna paint it green. All right. So far, we're having a great market sentiment behind US dollar. Another theory, so I know that I talked about the theory that the reason behind this could be his Trump's gracious presidential acceptance. Another reason could be that the other currencies are getting weaker, that the global market took it harder. That is especially vivid also in euro dollar because, well, now they have the French and Italian elections coming up, and they also have somewhat like a Trump-like, not Trump-like really per se, nobody's like Trump, but anti-establishment candidates. So with Brexit happening and the Cubs winning and Trump becoming president, now people in Europe are fearing that another Brexit-like, Trump-like occasion can happen in France and in Italy, and therefore, well, the euro is getting weaker, and with Japan, well, Japan actually their markets really dropped immediately on well, it was basically Asian market open as the U.S. election results were unfolding, and they had to go in an emergency meeting to figure out what to do about their crazy market drop. So they may be taking it harder, and that could also be behind the reason why we see this U.S. dollar strength, which means, well, the U.S. dollar getting basically relatively stronger than its counterpart currencies. Everybody's dumping the counterpart currencies, so therefore the U.S. dollar is becoming stronger. So it could be a combination. We don't know. It could also be the a faith that, all right, let's just hope that Trump is going to be better than what we thought. But there is no reason why that this could not change. I mean, still the market volatility is crazy. The U.S. dollar is still going up, but if you look at the stock market today, it started up it started, well, yesterday it was gaining and soaring like crazy. This morning, the Dow Jones reached an all-time high, which was incredible. But right after that, we now are seeing the markets pulling back and correcting and basically falling once again. So that just shows how uncertain the market is, and they're trying to digest. They're trying to look more into Trump policies. They're trying to trade based on what they believe. So the market is still very, very emotional, very, very sentiment driven. And the matter of the fact is, we really don't know what is going to happen in case of a Trump presidency. He hasn't released anything yet after the elections. So people are basically confused, and so should you, and so should we. And that is why, just exactly like the way that we created a very risk-averse market strategy, trading strategy before the elections, I definitely do believe that we have to continue doing that. Technically speaking, we definitely do have this bullish sentiment. We have had 4 consecutive streaks of bullish candlesticks on the daily chart with the, in case of dollar or yen. A break above this 105 has definitely opened doors for further up moves towards 108 on a medium term, and well, of course, for a short term, our next target is right around here. This is a previous support that is actually testing it right now. So it basically already tested it, you see. So this is the previous resistance and a previous support. So this was an important one. So it's testing it right now, and the next stop, if you're not bullish right now, and if you want to bet, this could be a bet. We don't have any indications, neither fundamentally nor technically, that this could go higher, and the market is incredibly uncertain right now, especially with dollar yen. Euro dollar is a little bit different, and the reason is, well, the fundamentals that I just mentioned, the fact that they have more to come. They have the Brexit that is still not finalized. They have, all right, what happened here? I have to create one more here. So we're going to go and create a second. Here we go. So this is euro dollar, right? So we have euro dollar. So with euro dollar, euro is quoted first. So therefore, the stronger the US dollar gets, the euro dollar drops. And you can see the market volatility during on the election days, very similar to what we saw on dollar yen. Right? Let's add our Ichimoku. And do our technicals. So again, with euro dollar, we had a major downfall that started back in 2014 all the way down well, middle of 2015, and after that it has been just consolidating, right? So the market, the euro dollar is very different now than dollar yen, because dollar yen is basically driven by the US dollar, while euro dollar is driven by many different things, including the pound, and including each and every country within the Eurozone. So there has been a struggle to prevent a drop below parity. About a year ago, we were looking at a potential of a drop below parity, but euro dollar has basically just been moving back and forth, up and down, with in this range between 115 and 105. And the Ichimoku cloud is, for the most part, flat, and we even Brexit. So this is Brexit, right? So in terms of when Brexit happened, it dropped below the Ichimoku cloud. It touched 109. U.S. elections, it actually went above the Ichimoku cloud, touched 103, but then moved back below the Ichimoku cloud, right? So the important levels with euro dollar, we need a smaller Fibonacci for this one. All right. So with this, we have the 50% Fibonacci level at around, well, this should be, I'm not sure if I do it correctly. So, all right, there we go. So the 50% Fibonacci level is 110.50 almost, right? Oh, I'm sorry. There we go. All right. Okay. So, and then we have the other levels. We have the 109 level. We have the 109 level, which is a pivot level, right? And so this is the level that is actually testing right now. Figure out how this is different. Okay. And then we have 107.35, which is our support. This one will pivot. Orange. This actually is another support, but also a pivot. And then we have, right now, our resistance level lays above the Ichimoku cloud, which is, well, we could say the medium target for it would be the 23% Fibonacci level at around 112.86. So there has been a crazy movement with euro dollar, and one of the main reasons why euro could be dropping even further than that, though, is, again, as I said, the elections that are coming up in France and Italy. Brexit will finalize probably in February of 2017. So euro dollar has more downward potential, in my opinion, than dollar yen. Dollar yen is a little bit more risky because it's only based on what the US is going to face. But with euro, we definitely have a lot of other countries in play. And from what we are hearing, fundamentally, it looks like it is not going to be good news. So that is the reason why with euro dollar, I am remaining in my bearish position. I am targeting, well, 107 is definitely one of my targets. I'm also targeting 106, as I have different target markets. And another reason for that is just that with all the craziness that has been happening in the past year with Brexit and with the US elections, euro dollar still has not been able to manage to break out of this rectangular box between 115 and 105. So because it has just been ranging up and down, if you stay long enough in euro dollar, you probably are going to be able to get to your target. And just look at the market movement before. The market movement here has been going up, down, up, down, up, down. At some point, it has reached 115 twice. It has reached 105 3 times. And so this cycle looks like it's turning into a saucer top as well. And it looks like it's moving back with all these smaller waves within it. It's moving back towards our support levels at 107 and 105. So for that reason, technically and fundamentally, euro dollar is one of the safer bets, because no matter what Trump does when he gets inaugurated, at least the first 100 days, it probably is not going to affect the markets worse than, let's say, Brexit, or worse than the U.S. elections. But the combination of Trump plus Italy plus France elections plus Brexit, that is going to be our next step. So that is what we're going to really keep an eye on. And another thing that we definitely need to keep an eye on the U.S. side is obviously the hikes. And we have to be all ears from any indications that the Fed is going to raise the interest rates in December or not. Right? So actually, let's take a look and see when is the next market moving events from the U.S. Okay, see, everything on our news is now about the election. And how did you guys handle it? Anybody cried? Anybody really got happy? All right, so we have filters. We're going to go on. End date. We're going to take a look at upcoming December 31st. Today is November 10th. So we're going to take a look at important news. All right. So coming up in the U.S., so we have a Friday. Well, Friday is Veterans Day in the U.S., but still we have Stanley Fischer who is going to speak. We definitely want to see what he has to say about the elections, whether or not it had anything to do with their views on the rate hike. And well, then we have the retail sales next week. We have the industrial production, building permits, consumer price index, which is inflation, which is very important. Leading indication in manufacturing PMI, goods orders. These are all within November. This is before Thanksgiving. But the FOMC minutes is actually what we really need to be keeping an eye on. I do believe that we have a webinar on Thursday after that with Orbex, which if you are planning to trade the US dollar, that could be a good day. And then after that, we have the GDP. Definitely. So regardless of what the FOMC reveals, the next week's GDP growth could still have an impact, because they probably, if they're going to raise interest rates, they're going to give out indications, and they're probably going to say, oh, we're going to look at the growth. So this growth is going to be incredibly important for the December rate decision. So December rate decision is going to get its indications from GDP from the most part, jobless claims, unemployment rate, right? The NFP numbers in December, and so the monetary policies, that is statement that is on December 14th. So we have 2 months. So there have been indications that we're going to get there's going to be an interest rate hike in December. So we have all those 2 months from Trump saying what exactly he's going to do to the next GDP releases, to unemployment. So if we get everything above and beyond, if we get very good GDP, and we get better than expected NFP results, breaking this 3 months negative outcome streak. So that is when we could first of all, speculate that there is going to be a rate hike, and it also could give the Federal Reserve enough confidence to actually raise interest rates, in which case we are going to see further drops in the euro dollar, and of course further up moves in the dollar yen. All right. So with that, we covered euro dollar, we covered dollar yen. If anybody has any requests on the currency pair for me to cover right now, definitely go ahead and write it down in the chat box. This is a live webinar for those of you who just joined us. I don't know why is it that people are just joining us right now. I'm wondering if there was a misunderstanding in the timing, because there was a time daylight saving that just happened last week in the US. So I'm hoping that everybody's on the same page. The 5 p.m. GMT has been great for everybody. All right, so we're getting requests here. We're getting requests: dollar Swissy, Aussie dollar. All right, let's go. Let's go with Aussie. How about that? Let's do Aussie dollar first. If we have time, we'll get into dollar Swissy as well. Dollar Swissy, actually, I did write an article about it yesterday on investiva.com. You're more than welcome to go and check it out. So Aussie dollar. Aussie dollar didn't have that crazy. I mean, it was kind of crazy, the volatility, but it wasn't that crazy. Like the strength of the candlestick was just, it didn't like go up and down. It was just very, by the way, dollar CAD was also very interesting. Maybe I'll cover that. So Aussie dollar basically has remained, where is our channel? Aussie dollar has remained within our upward moving channel. So even the volatility in the market during the US elections was not enough for Aussie dollar to break above this channel. I need to do this so we can extend this. All right. And again, let's do a history of Aussie dollar. Let's first take a look at the monthly chart. All right. So Aussie dollar moves in cycles, just like many other currency pairs, and it has been going up and down, up and down. As you can see, so for example, this down move right here in 2008 during the market crash was a lot crazier than what we saw either during Brexit or US elections. Like the candlestick strength was just massive over here, while with this month is basically a doji candlestick on the monthly chart. And so here we are seeing the Aussie dollar below the Ichimoku. This is the monthly chart. It has been kind of bottomed out around here. Right, so this is our support. It has bottomed out. It is moving upward. And so the question is this going to continue the cycle and go to the bottom of the previous cycle, or was that it, and that was the bottom of the market from a long-term point of view? All right, and then we're going to have the Ichimoku just to get our support and resistance levels right. This is our resistance right here at 23%, 0.79 almost. All right, so now we're going to go back to the daily chart. All right, and here we can see that the Aussie dollar has been kind of teasing above the Ichimoku cloud. The prevailing cloud is actually to the upside. However, well, we did have this pressure. So this really comes down to, so Australia, we have to think about this. How could, first of all, Aussie itself get impacted by a Trump presidency? And then how can the US dollar contribute to the Aussie dollar pair movement. So a Trump presidency will not directly really impact the Aussie dollar, only maybe in the sense that people who were saying if Trump becomes president start moving out to Australia, which will increase their real estate. But the real thing that will impact the Australian economy is China. And then China, a Trump presidency will also have a direct impact on China. So China is a middleman here between Australia and America. And of course, Trump's policies so far have been of those that will negatively impact China, which will negatively impact the Australian dollar, which will perhaps positively impact the U.S. So these are all in case Trump doesn't mess it up and don't like it really. So that here's the thing: even though his policies are for a Chinese negative impact on China, we don't know if he actually is going to be able to implement it. He doesn't have the experience, so there is a lot of uncertainties. But let's be positive and say that Trump can do all those. In that case, my initial reaction would be, and maybe that is the reason why we're seeing this over here as well, is that, well, Australia, Aussie dollar could perhaps fall lower, but it hasn't. It didn't. Actually, let me say, I'm just thinking out loud right now. The reason, maybe one of the reasons why that we didn't see the massive volatility right at the beginning, even when people thought Hillary is going to win, was because of the dangers that Trump could have to China, which could devalue the Australian dollar. Of course, this is not the only thing that can impact the Australian dollar. There are so many other things. But with that, we're now seeing the Aussie dollar still moving within this channel. It is testing below the Ichimoku cloud. The Ichimoku cloud is thinning. So with that, right now the market sentiment is obviously bearish. You can use Fibonacci in different ways. Maybe this would be the one. Okay, yeah, so let's try this out. So the pivot level right now is right around here at 23% Fibonacci level, which also falls beautifully below the Ichimoku cloud, as well as where the market really tested today. And also the lower band of the channel. So right now, I would say with Aussie dollar, I'm a little bit more on the wait and see situation. I would want to see what Trump is going to say. I would want to see the pair actually break below this 0.7575 before I get into a position. So, and if it does, then our next stop could be 0.7450-ish. Right. So again, so with Aussie dollar, we don't have that kind of a clear indication of what's going on, because in one hand, it is moving within an upward channel. On the other hand, we have a massive bearish sentiment, and on the third hand, we have it testing the Ichimoku cloud. So it's a little bit hard to tell what's going on right now with Aussie dollar. I hope I answered your question. And so next, as I said before, I want to quickly also take a look at dollar CAD. So everybody was okay with the levels and everything. So with dollar CAD, so that was interesting, right? Even before, as the market was reacting to Donald Trump winning, dollar CAD, like as dollar yen was dropping, dollar CAD was actually going up, which was pretty interesting. So Canadian dollar itself was devaluing. Again, so with this, if we just and only look at it from a U.S. election point of view, this could be have a reason behind it that could be similar to the fact that many people were saying that they're going to move to Canada in case of a Trump presidency, and the Canadian embassy's website actually crashed on the U.S. election day, as everybody was basically trying to figure out how they can become a Canadian citizen. So that can obviously create volatility. So Canada is now fearing perhaps more people coming in from the U.S. That could be a good and a bad thing. So maybe that was the reason why of the uncertainty behind the Canadian dollar devaluation. Another thing, obviously, is oil. And we have also the technical. So the Canadian dollar, dollar CAD has a very similar chart to that of dollar yen, right? The only difference is that it is a little bit ahead of dollar yen in terms of it's bottoming out and moving to the upward channel. It's ahead from dollar yen in the sense of US dollar strength. So Canadian dollar is basically a little bit weaker than the Japanese yen. That can also become useful in case you trade the CAD yen pair. So with that, right now, all right, we're seeing, let's do a quick technical analysis, quick trading strategies. As I said before, I hate to tell this to you, but still the markets are incredibly uncertain. So I would not make very long-term trading strategies at the moment until we know more for sure. Right now, it has broken above the HMO cloud. It is testing to reach 135. The market sentiment is kind of bullish. If we look at the 4-hour chart, it is a little bit more volatile, obviously, but it's still above the HMO cloud. So as you can see, even in the 4-hour, we saw after this doji candlestick, we had a bullish engulfing, but now it's kind of to the downside. So fundamentally and technically, if you do want to trade, I would say stick to the range and narrow the range. So stick, for example, within the 4-hour chart and set up your risk tolerance strategy and basically calculate how much risk you're willing to take. And I believe that right now, I mean, this is after the elections, we're not going to see crazy moves anymore. So a range trading could actually be a good deal for you. Definitely do set your stop losses in place in case something crazy happens. Oh, one more thing that I forgot to say. Donald Trump actually does have trials coming up on November 28th. And he is going to court for, I believe, child rape and fraud for his Trump University. So we really don't know. I know that President Obama has said that they really would like to work with Donald Trump and help him become a successful president. But the matter of the fact is that he does have to go to trial after this. And if he does, and if he comes out guilty, that is when we're going to have another set of volatility in the market. Is he going to get impeached? Is he going to resign? We don't know what is going to happen. So hold on to your seats, hold on to your trades, trade really risk aversely, I would say, before we really know for sure, before January 20th. And invest responsibly. If you have any questions, we're a little bit over our webinar today, but definitely feel free to ask. You can send your questions to orbex.com. You can send your questions directly to me on investiva.com. So that is it for today. Thank you so much for joining us. And I hope that I will see you next time.